Rob Scott, thanks for joining me. You've had a very solid result, I think, overall, and a lot of reshaping of the business. Investors out there wondering about these markets, how are you placed for both a downturn and growth?
Well, Tiki, I think as we demonstrated today, we've got a lot of solid businesses in the portfolio, and our results really demonstrate both the resilience and diversity of our platform. So it's very difficult at the moment to really predict what's going to happen, particularly in the global economy. So I think given that we have a strong balance sheet, strong businesses, that we're well positioned to withstand a range of economic conditions.
You've got to thank Bunnings, of course, for a lot of the performance again, and Officeworks. Now, Mike Schneider, looking at his E-strategy, I know, can it continue this extraordinary growth story?
Well, you're right. Bunnings delivered another exceptional result, and there's obviously been a lot of concerns around the slowdown in residential housing, and I think the Bunnings result today just emphasised what a strong and resilient business Bunnings is, and Mike Schneider and the team are doing a fantastic job setting that business up for the future. As you say, Officeworks, another strong result. Together with our chemicals business, our chemicals, energy and fertiliser business delivered a very pleasing result. So a lot of good performances across the group.
Less good, and another perennial, but this time perennial underperformer was Target, and really the Kmart group together this time, because earnings not very good at Kmart either, and usually one's going strongly and the other not. Now, Rob, this has been going on for years with other assets within Wesfarmers. If they don't perform consistently, they're out. Why is it that you keep trying to reposition these businesses?
Well, I think, Tiki, Kmart, we've expected a lot of Kmart over the years. They've delivered exceptional results. Now, even though we had a slight downturn in earnings in Kmart, the financial performance, cash flow generation is still very strong. And although it was a not so good year for Kmart, they finished the year a lot more strongly, good customer service metrics and generating very good cash flow. Target has been more difficult. Now, since Ian Bailey and Marina Jonow have come into their new roles in Kmart and Target, we are seeing an acceleration of the Target repositioning, which will ultimately mean better focus on quality and style, a smaller store network, supported by a much better online offer. So look, time will tell whether we can get it right, but there's lots of activity in that division at the moment.
Right, but this word repositioning, hasn't this playbook happened before? And I know you've got Catch as well now with the online, but haven't investors heard this again and again about repositioning Target?
You're right. It's been difficult, a difficult decade, I guess, for Target. And Target, like a lot of other retailers in that middle market, have been caught with a lot of competitive threats, a lot of competition from international retailers, a lot of competition online. I guess what we have done in the last 6 to 12 months is move the Target customer proposition further away from Kmart, to make them more differentiated and to accelerate the digital platform. And the Catch acquisition is a way of really turbocharging our efforts around e-commerce and digital. So look, time will tell, but I'm optimistic that Target can continue to maintain profitability and deliver better outcomes to shareholders.
I guess the question is how much time for Target, because overall, broadly, you see that the retail market and confidence, consumer confidence out there is not that bad.
Well, that's right. And look, I think it's important to put Target into the context of it's a relatively small part of our overall group. So the engine rooms on the retail side are very much Bunnings, Kmart and Officeworks, and now with the acquisition of Catch that we've just completed, that provides a new platform for growth. Now, we're not satisfied with the Target performance. We've got more work to do, but really it is quite a small part of our overall retail operations.
Rob, the Treasurer has commented on how businesses should be spending their money this last week. Now, Wesfarmers has announced a special dividend back in April of $1 a share for investors. What do you think of his call out that companies need to be doing more for the country, if you like, and in particular the amount of share buybacks across the board that we've seen and special dividends? Has he got a point?
Well, as you would know, we get a lot of pressure from various investors to try and deliver better short-term results, and they become very impatient if the short-term results aren't there. So frankly, I'm quite happy that the Treasurer is putting some balance to that equation and encouraging people to take a longer-term view around investment. It's certainly what we do in Wesfarmers. We try and take a long-term view, and it does require a degree of courage as a CEO or leadership team to make that investment for the future. Now, over the last 12 months, we've invested around $800 million of CapEx in our core business. We've earmarked $1 billion of new investment through the Catch and Kidman acquisitions. And as you rightly say, we've paid out some very strong franked dividends, which are really important for our shareholders. So I think we can achieve both outcomes, investing in the future and paying strong dividends.
You mentioned the Kidman acquisition there. Now that's going to hopefully go through from your point of view, I think, in a week or so with shareholder approval. Now you bought it, if you do end up buying it, at 47% premium. You're calling it a chemical play, Rob, rather than a mining play.
That's right. Look, our interest in the Kidman business is very much the opportunity to invest in the downstream processing of lithium hydroxide. Now, there's a lot of hype around lithium and rare earths and the electric vehicle thematic, but really when you focus in on the areas that we are interested in, we are very much interested in the chemical processing opportunity adjacent to our plant in Kwinana. And as we demonstrated in our results today, we have a fantastic world-class chemical operation that's delivering really good results. So that's what gets us excited about the Kidman opportunity.
So you also announced that you've walked away now from your pursuit of Lynas, the rare earths producer. Given that you're looking at Kwinana, have you got other rare earths businesses in mind?
Oh, look, I wouldn't want to signal other opportunities that we're looking at other than to say that our core focus across Wesfarmers at the moment is to focus on investing in our core businesses. So there are a number of opportunities in our chemicals business, a lot to do with debottlenecking existing plants. We're actually finding that applying some of our advanced analytics capability is leading to improved operational performance and utilisation in the chemicals area. So a lot of organic growth is really the focus at the moment.
Right. Any lessons from Lynas, Rob? Because you started that as a partnership, you then turned that into a takeover. You've walked away with a bloody nose. Any lessons, do you think?
Well, I guess in Wesfarmers, when we think about acquisitions, the only way we judge success with acquisitions is if we ultimately deliver a good shareholder return from the investment. There are certainly no KPIs that I have or our team have to simply judge success of an acquisition by whether you buy a business. So we will continue to look at a range of opportunities, but the only way I judge success is whether we ultimately deliver a return on investments.
Right. Well, speaking of return on investments, you sold down Coles, of course, but you also sold down your share in Quadrant to Santos. I spoke to Kevin Gallagher a few days ago, and he was talking about all the upside with Dorado and Quadrant. Do you still have some eyes on that upside?
Well, I guess when you think about the Quadrant investment, we were a minority investor. It was a fantastic investment for us. We're really pleased to work alongside the shareholders there, and look, from all accounts, it will be a great acquisition. So one of those great win-win situations, that it was a great outcome for us as shareholders, and hopefully it will be a great outcome for Santos. But really in our business, we are not really equipped in Wesfarmers to deal with more of the exploration and development side of the gas business, so it's probably better for others to pursue.
Finally, you haven't specifically talked about a trading outlook at all, but broadly the economy, Rob, this very low A dollar that we've got at the moment and the risk of trade wars, how do you see the outlook going forward?
Well, Tiki, as I said today, although there's been a bit of doom and gloom locally, I think our results demonstrate that things aren't too bad in Australia, and we still have relatively low levels of unemployment. The economy is growing, albeit a bit slower than it has been previously. We will hopefully start to see the tax refunds flow through. Stabilisation in house prices should also help confidence. So whilst I think we have a lot of things going for us, clearly the tensions between the US and China are weighing on sentiment, and clearly China is a very important trading partner to us. So it would be naive to not be concerned about some of the ramifications if a trade war was to create further fallout.
Rob Scott, always great to talk to you. Thank you very much.
Thanks, Tikki.